And now, Part 3 of Conversations 3.0, Bullion, Mining Stocks, and Hyperinflation.
Let me ask you this, because I think the awakening is somewhat exponential. I think people are waking up to many different things. There's a lot to wake up to, but what has your experience been in terms of trying to wake up people that you care about, whether it be friends or family?
Almost utter failure.
Okay.
In my case, I've had, a number of personal, quote-unquote, causes that have motivated me going back to when I was an economics student. There are things that I've been ranting and raving about, for the better part of 25 years. And, things like the massive structural unemployment that is destroying our standard of living, a system of income taxation, which by very nature must strip out all the wealth from the vast majority and deposit into the hands of the top 1 or 2%. So for me, it's not really a new frame of mind to be thinking along these lines because, I've literally spent the vast majority of my adult life thinking there are these huge issues, that people are completely oblivious to. And, I just feel like I've been, beating my head against the wall. So for me, I actually find the precious metal sector refreshing in that I'm actually having more success in reaching people now than in earlier years. So, I still understand the frustration you're talking about, but, as somebody who's been at this a long, long time, it's getting a little bit easier rather than more difficult.
I agree with you about the precious metals. I think that you can say, look what the banks have done. Everybody can see the fraud and the corruption in the banks and the government. And so then when you talk precious metals, at least some people's ears perk up and say, tell me more. Are you telling me I can protect myself? Am I too late? And I think that that's common ground that is refreshing for guys like you and me.
And along those lines, very early in my own research, I was introduced to a brilliant American researcher named Chris Martenson. And, he spent a great deal of time and effort putting together this very large, very comprehensive presentation, which he calls his crash course. And, this is basically exactly the sort of message you're referring to in that Mr. Martenson goes out of his way to present this to people in the least frightening and most optimistic tone possible. In fact, if there's any failing in the brilliant presentation, it's that he's being, too optimistic, in relation to the dire news he's presenting on many fronts. But, if you're looking for a way to reach people and present a lot of this information in the least threatening manner possible, there's a great place to start because there's somebody with a wonderful message who's been a tremendous influence on my own writing and very accessible to ordinary people.
Okay, and that's Chris Martenson?
Chris Martenson, he has his own site, chrismartenson.com, and what you want to tune into is his crash course. We actually are fortunate enough to be allowed to host those videos on our site, so you can also find them in our guest commentator section.
Oh, fantastic. Well, Jeff, thanks for that. And so is he a Canadian gentleman or is he an American?
No. He's American and, one of the Americans. And, it's not like there's a shortage of them. There's plenty of Americans who are doing fabulous work in trying to get the word out. But, they're just drowned out by the media machine.
Yeah, I agree. I'm a huge fan of Paul Craig Roberts. I'm a huge fan of Max Kaiser. I'm a huge fan of even Naomi Wolf. You have people from the left and the right all coming to the same conclusions, and that's refreshing. It's refreshing to see people break their false right-left paradigm and say, oh, it's really us against them. Okay, that makes sense. Let me ask you something else about your site. Now, you guys have some great information on there about mining companies. Can you tell me a little bit about that? And I don't know if you'd have any, tips for our audience or maybe they could jump in and find their own free tips. Tell me a little bit about your mining sector information.
Well, first of all, we were more mining investors ourselves. Both Chad and I are Canadian, so we were more mining investors ourselves originally than bullion investors. And then, of course, quickly became aware of the arguments for bullion and became enthused with that. But the wonderful thing about bullion and the mining companies is that they are a perfect complement as investments. Bullion is your insurance. It's something you want to have available and ready, to deal with, a financial emergency. Whereas the mining stocks are perfect vehicles to slot into someone's retirement account because not only are they equities, but what people have to understand is that a commodity producer, by the very nature of its business model, provides natural leverage on the commodity it produces. And this is quite easy to illustrate. If we take a really simple example, and let's assume that gold's back at $1,000 an ounce, and mining company A can produce gold at $500 an ounce. So at that level, everything's straightforward. Your investor buys gold at $1,000. He buys shares of a mining company at X number of dollars per share, and then let's say the price of gold goes up $100. Well, for the bullion holder, it's very straightforward. Bullion's gone from 1,000 to 1,100. That's a 10% gain. Mm-hmm. For the holder of the gold mining company that produces gold at $500 an ounce, 20%. When gold moves from 1,000 to 1,100, their profit margin goes from $500 an ounce to $600 an ounce, a 20% gain.
Right.
And of course, with the higher the price of the producer, the greater the degree of natural leverage, but of course, the more the risk as well. And so, you can get leverage, you can get investments for your retirement plans with the miners, you can get insurance and that ultimate security with the bullion. And so, this is why we want to try to, recommend them equally to people as investments, because they serve two different but extremely important purposes in a portfolio.
Well, that's a really good point. And I think that, for folks that might be interested in taking a look at some of your mining recommendations or reading some of your material, I think people would be interested in the dividends story. And I think that's a story worth telling. Jeff, what's your perspective on dividends now and in the future that these companies might be paying?
Well, there's two entirely different dimensions to this. On the one hand, dividends are being paid out in paper. So you have to ask yourself, if your hypothesis is that this paper is going to zero, then how attractive is it really to be paid dividends? However, the converse side of that is when we look back to the Great Depression, there's the famous example of a gold mining company named Homestake Mining, which over the course of the Great Depression was able to be a massively successful investment, that appreciated to, 10, 15, 20 times of its value, while everything else was plunging by 90%, which of course is a swing of 100-fold, from people who were in regular equities versus people that were in Homestake Mining. Mm-hmm. And one of the things that Homestake did, and I assume that other miners did as well in that era, was to start putting out generous dividends because they could afford to, because they were one of the few companies making good profits. So, in that era, when we weren't worried about the U.S. dollar going to zero, that was a very effective strategy, and if we were in the same situation today, I would look for the miners to start paying out larger dividends as a means of really, boosting enthusiasm for the sector. But because we're in this different dynamic today, where we're wondering, whether the paper we have today is going to be worth, anything tomorrow or next week, I wonder if the dividends are going to work that way this time, or whether those companies that want to try to appeal to the segment of the market that wants some sort of an income on their investments, maybe what they're going to do is try to find some way of paying out actual bullion dividends to their shareholders.
Oh, well,
that would be obviously something that would have enormous appeal.
Yeah, that would be neat, wouldn't it? It would be kind of fun to get your 1 ounce gold coin every quarter in the mail. Let me ask you this: as an economist, and I'm not an economist, so with great respect, I ask your opinion on this. You have the Canadian dollar. You're staring at us with American dollars. So for those of the listeners of this interview that are like me and have some investments in stocks, how does that shake out if the dollar does ultimately collapse? So I guess it's a two-part question. What is your opinion on the future of the dollar, number one? And number two, for those of us that hold dollars through the stock market, what does a collapse do to those holdings if you can't trust a system built on paper? How does that all shake out?
Well, the best answer to that question, if you don't mind a long one, would be to start off by introducing the third member of our Bullion Bulls team, which is Brian Boudelier, who in fact is a U.S. resident and citizen. The reason I'm mentioning him is because, he's our mining expert who's doing the vast majority of our work with mining companies. And so he's a very avid investor in these companies. And what he did for himself a couple of years ago was to work away with his broker that he could open a Canadian dollar account for his equity trades.
Okay.
And he is gradually moving more and more of his equity trading from U.S. dollar-based trading to Canadian dollar-based trading. And the reason for this is that, while all this paper is heading towards zero, it's not going to head towards zero at the same rate. And, we're not necessarily a whole lot better in Canada than the U.S., but we happen to be somewhat more fortunate in the sense that we are one of the commodity currencies in a world that's commodity hungry. So, we've got our tar sands oil, we've got all sorts of mineral wealth, we've got, potash for the farming and agricultural industry. And, so that basically is kind of putting a floor under our currency, at least at this stage of the game. And so, for Americans who simply don't have that level of comfort with their own currency, moving to Canadian dollars, if you're able to do so, is definitely an advisable way with at least a portion of your wealth as a hedge. Even if you're not totally convinced on this, try to move at least a portion of your wealth out of U.S. dollar holdings and into, Canadian dollar holdings, or, for people that prefer trading, in Europe, Swiss franc holdings. You just simply cannot afford to have all your eggs in the U.S. dollar basket because that's far too dangerous.
But if you're invested in these companies, doesn't that shelter you from the total collapse of the dollar? In that my investment in the stock is my shelter.
Yes and no. On the one hand, you'll have extremely astute people like Mark Faber recommending to people that they have an equities component, because if and when hyperinflation hits, equities, relatively speaking, retain wealth better than a lot of other asset classes. However, here's the catch. The more this inflation ratchets up and we get closer and closer to genuine hyperinflation, which is, just money literally going to zero, how do you extract your wealth out of your equities? Mm-hmm. Because when the paper is losing value so quickly, by the time you've managed to sell a stock and get that money out of your account, maybe it's lost 10% of its value, maybe it's lost 25%, maybe it's lost 75% of its value, and that's if you manage to spend it in 2 or 3 days. So this is the trap with hyperinflation.
My thanks to Jeff for sharing his valuable time with us, and check out bullionbullscanada.com. Thanks for watching Conversations 3.0. Please stay tuned to my channel for further breaking updates, conversations, and microdocs. Good night.